Okay guys, so following on from the last video that we did on Saturday, we can see that we did push up to our targeted range, pumped up by 9.89% here on Cardano's ADA. We were talking about a target between 82.96 to 84.88 cents, and of course we have seen the rejection to the downside. This completed our fifth wave move to the upside between 1.236 and 1.618 on the Fibonacci levels. It was of course possible at the time that we had a continuation of this breakdown, but we did of course push to the upside. So our strategy was quite simple, was to kind of go long, stop loss lower than the previous swing low, all that kind of good stuff. Anyway, let's get into today's video then. Let's clean us off the chart, get rid of the fibs off the chart there, and talk about what happens next, okay? Because this move to the downside is kind of what we're looking for. We're looking for a continuation of this, and we are looking at the 200 EMA, but let's go ahead and do the measurements to see where things could potentially be going. I'm looking at this breakdown here in an interesting kind of perspective. Let me go ahead and just do the due diligence on this one, just so that we don't do anything too crazy. Yeah, okay, cool. So we hit the kind of typical areas between 1.236 and 1, so we're not too concerned about that. Let's go ahead and measure this distance. Do you wonder whether or not that's an irregular? I don't think it is, but I'm going to take this one anyway from that kind of low area. Move this over to our current swing high, coming in at 1200 hours, I believe. No, 0400 hours, sorry. And in here, we can be looking now for a move between 74.5 and 75.9 cents, basically that 200 exponential moving average. I'm going to go ahead and draw in a yellow box in that range so you guys can see what that looks like, and remove the fibs off the chart. What we're looking for within this range is a three-wave breakdown. It is an A, B, and C structure that we're looking for. And you can see here that actually at the point of recording, we're getting a pretty nice red candle coming in, looking at that 50 EMA, the yellow line coming through the chart here, as whether that's going to hold a support. I don't think it is. The reason we're overbought on the 𝗕𝗪𝗪, we are looking for a shift to the downside. We obviously do have an oversold 4-hour, so we can take a look at that 4-hour chart and see what that looks like. It looks like we can still see rejection here. We can of course see a bit of a run out, so it'll be interesting to see whether or not this continues moving down as our 1-hour chart is indicating to us. The 4-hour chart is showing us with the 50 EMA and 50 SMA a little bit lower, so again in line with our kind of expectations there. And the 8-hour chart is still looking for downward momentum as well. So I'm looking at this thinking, yeah, we have a higher probability that we lose the 50 hourly EMA and SMA and move down towards the hourly 200 EMA, which would line up nicely with the 4-hour 50 EMA. Okay, so I'm looking for a three-wave move to the breakdown. Is it going to three-wave move to the downside in this breakdown? Is it going to move in a straight line? No, because I would expect us to see a little bit of volatility within that structure as well anyway. And so expect some volatility basically. I think if we were to be trading it, the best thing to do here is stop loss above the swing high from the fifth wave and try and target out down towards the 200 EMA. Again, the risk reward ratio isn't great, so it's not an ideal trade. You want to be something above 1.5. So if there is an opportunity, we'd have to look for a better entry to do that. So if you are in the free Discord server that's linked in the description down below and are a part of the profit pit, which all you have to do is sign up to one of the exchanges, BitGet, Blowfin, etc. The links are in the description. If you signed up with one of our links, you can gain access to the profit pit, which is an area where we communicate our active trades in real time. So you get to know the entries, the exits, the stop losses, the take profits, the percentage of risk, the percentage of your trading account that you're putting in, etc. So if there is an opportunity here for a short position, which is what I'm looking for, then that is where I'm going to be putting that and communicating it down in the Discord server in the profit pit. So you can go ahead and check that out if you are interested. So let's take a look at this then, right? So if we do have this three-wave move to the downside towards the 200 EMA and the 𝗕𝗪𝗪 is hinting at that, what about the relative strength index? Would this be a significant break for Cardano? It would actually put us in a very interesting position, simply because we are testing this 50 level. We can bounce and we could potentially rally up higher. I don't think that's going to be the case. We are more than likely going to lose this and take the RSI down to oversold as well. You can see that as we were pushing up here, we had some bearish divergences and getting noted, as well as some potential hidden bullish ones as we had those moves to the upside. At the moment, nothing else is being indicated there, but we'll take a look at the MACD histogram, because this one shows us whether or not we do have something more sinister going on. And while we can see that there is lower lows on our histogram here, but it's higher lows over this side. So that is bearish divergence. Let me show you that. So if we take this line and we move it across, we have basically higher lows on the actual price action, but it is lower lows on the histogram. So this is a divergence and a bearish one. Basically, selling momentum is stronger than the candles are hinting at. And although we have pushed up here, okay, we haven't actually got anything to kind of say we've got bullish momentum. Okay, bullish momentum would be that we have a lower high in price, but we have a higher high on the histogram, right? But we don't see that. So I am leaning more towards kind of confluence that we are in fact moving down, not up, for Cardano after a significant run, which is pretty common, right? Because you can't just move up in straight lines without a significant retracement and profit being taken. For example, we hit the low target ranges down here on Tuesday last week, and we did rally up 31.75%. So we can't just move up 31.75% without a pretty decent retracement and profits being taken. This was the area that we scoped out, and this move to the downside would be 10 to about 11.5%. It's not going to be that uncommon and would put us in a pretty strong position for a continuation of a big better move to the upside. And as I zoom out of this, you can see that maybe this structure isn't the best one because it doesn't look like a proper wave 4 situation going on here, but it could actually be a precursor to something else that's going on, which would be a more elaborate kind of move to the upside. I'll draw this in as A, B, and C over here. And then maybe what we've got going on is the A wave, the B wave, and then we'll have another C wave taking us out towards the dollar level. Okay, so it does look like there's a lot of potential going on when it comes to the price action, but we do have to experience a little bit of a retracement after such a significant surge to the upside. It's not uncommon, and it's something that we should be expecting, to be honest. So let's go ahead and roll this up into a daily time frame then. Okay, because on the daily time frame, it's not as good as I would like it to be. And the reasons for this is that we do have a kind of weaker move to the upside. But this isn't actually all that bad because I am expecting us to see something like this at the beginning kind of structures before we maybe get into bigger kind of launches to the upside. Okay, so we did have the accumulative range down here between 27.25 and 53.95. We tapped this twice. We had the potential to come down lower. I'm going to remove these, but there's no guarantees, right? There was never ever going to be a guarantee that we were going to be moving down into these lower ranges like we had seen before. Okay, so we need to be aware that this is still a potential option. Okay, even though we have broken to the upside at the moment, we haven't broken out in such a significant way that it prevents us from moving down. Now, our stochastic RSI is overbought, and we are looking for downward momentum on this daily chart. And so we need to be aware that it's possible that this whole entire thing breaks on down and takes us back into this accumulative range. Now, we're going to be paying close attention to this momentum oscillator. Okay, the stochastic RSI, because if the stochastic RSI moves very rapidly from this overbought area to this oversold area without doing much damage to the price action, i.e. just a 10% drop, then actually this is a very bullish place to be and we are likely to see a break to the upside. But at the moment, there's a higher risk of a breakdown than there is of a continued rally to the upside. And again, everything when it comes to technical analysis is just probabilities. And so we have a higher probability at this stage of a break to the downside than a break to the upside, in my humble opinion. Of course, that's all it is. But I'm looking at this and I'm thinking to myself, yeah, we're probably going to see some volatility here for ADA. Now, the good news is that we have broken above the 200 exponential moving average, which is our white line coming through the chart. That's currently sat at 72.9 cents. It's possible that after all of the resistance here, that the move to the downside is only going to find and turn the 200 exponential moving average into support. And if it does that, then we're actually again in a very bullish situation. And hopefully the stochastic RSI will be in a strong place at the same time too. The other thing to bear in mind is we do have a golden cross on the horizon. Now, a golden cross is the 50 SMA, the yellow line, crossing above the 200 exponential moving average. Now, Because these are just averages, one being exponential and one being simple, they basically show you what's happened in the past. The white line is 200 candles and the yellow line is 50 candles. Now, if we take a look, we all know that the yellow line here is going to be looking for a run to the upside, or a kind of more momentum shifting to the upside based on that 50 SMA, because the candles in the last few weeks have been more green. This is an indication that that slow moving, and you can start to see it tilting now, is going to be moving up more aggressively. It's going to be more sharp as it kind of aggressively moves back upwards, right? Whilst the 200 EMA is more smooth, although is heavily weighted towards the most recent candles, is still going to be tilting upwards, but you're going to get this cross. Now this cross represents the 50 SMA crossing the 200 EMA. Basically, short-term price action is going to be higher than long-term price action, and it is a bullish indicator. At least a lot of people will take it bullishly. To me, it's only ever shown you what's already happened. It's not showing you what's going to happen, but people will act emotionally, specifically if the headlines start picking up on a golden cross situation. So we should be aware that there's possibly going to be a catalyst for further growth in the price action of ADA. So we're probably a week, maybe 2 weeks out from that golden cross situation on the daily time frame. And so we could still see a correction down on our stochastic RSI, support found at around the 200 EMA, a bounce from there, support being found, golden cross situation, and well, basically traders see a reason to continue to go long or to spot buy and dollar cost average into Cardano's ADA. So it's looking okay from those kind of perspectives, right? Now, if we take a look at the relative strength index, you can see that it's still quite high, but not fully overbought. We can come down and retest the 50 level and still be perfectly okay. So nothing wrong with that. And the MACD histogram here has grown up, but hasn't really gone higher than some of these previous highs that it had. So there's the idea here that this was potentially going to be bullish divergence. However, it doesn't look to be the case. So it to me looks like this is actually quite a neutral position. So MACD histogram not really giving us too much. The accumulative and distribution or accumulation distribution lines is low. Okay. Lower than most recently, but higher overall. So if we bring the price action in here, you can see that basically accumulation still sits quite high. Although zoomed in, it does look more negative, but actually on a zoomed out view, you can see that that's actually still looking and holding up quite well. So for the most part, I'm not concerned over the things that I'm seeing. Obviously, there's the idea that this is some kind of bull flag and this continuation move to the downside. We hit the accumulative range. We're still looking for the bounce to the upside. We are still looking at some pretty juicy targets for Cardano. Conservatively, it's $3.09 to $4.77. Mid-range is going to be somewhere between $5.27 and $12.91, and then you have that bullish $38 moon boy target at the higher end there. Looking at this, I'm still looking for 5 waves within the C wave. We're looking for diagonal in my opinion, but I could be wrong. We could be looking for an impulsive run, and if we do end up going impulsive in terms of Elliott wave, being a 5-wave movement, then that is going to put us in the higher range of targets. So I'm conservative. That's why I'm calling this diagonal, because diagonal allows us to look more conservatively between $3.09 and $4.77. But there's more possibilities, more options for higher bullish targets than there are for lesser targets, right? So we have kind of the idea of expanding diagonals, ending diagonals, impulsive runs, 3 possible scenarios taking us higher, whereas we have the idea that we're still in the B wave for a stupidly low bearish target. That's one. And then you've got the contracting diagonal, which puts us at between 3.9 and 4.77. So there's 2 kind of weaker targets and 3 more bullish targets. So probability is still swinging higher than it is on the lower side, but I'm conservative. So I'm going to be looking at this lower range until proven otherwise, which of course is all we're doing here is waiting for more data to kind of tell us and narrow us down the options, right? We've got one super bearish, new lower lows, for Cardano's ADA, which the bears would love, and then we've got everything else just looking really bullishly. Okay, so for the most part, Cardano is still very much on track. We're looking very strong across the time frames, in my opinion. I expect volatility, but we are still looking for new all-time highs, and there's a high probability that we do in fact have new all-time highs for Cardano, and I still put that in 2025, although probably Q3, Q4 by the time we finally get there. Now, I'm going to leave the video there. If you found it useful, smash the like button. If you're new, subscribe, and I'll catch you all in the next one.